Good morning, everybody. It is Wednesday, April 13th, 5:55 a.m. Central Time. As I speak here, July corn futures down 1 3/4 at 770 3/4. December corn up 2 1/4 at 733 1/4. July soybeans down 8 1/4 at 1652 1/4. November beans down 8 cents at 14.99. July Chicago wheat up 1 at 11.13 1/2. July Kansas City wheat up 3 1/2 at 11.70 1/4. July spring wheat down 1 1/2 at 11.54 1/2. If you guys are listening on the podcast, appreciate it. Leave me a rating or review on that Apple app in particular. Could use some more of those. If you are watching on YouTube, guys, hit that subscribe button, like these videos, leave me a comment. All of those things will help me to grow this channel. My goal is to get to 5,000 subscribers. We're getting pretty close. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Check out my premium subscription service. I send a ton of information out to my premium subscribers every single day. My morning email goes out before 6 a.m. Central every business day. That includes every overnight headline you need to be aware of, a ton of weather information, graphics, charts, all of my grain marketing recommendations. My subscriber-only videos are also included in this package. I did one yesterday regarding the corn market, rallies, and late planting. Does the corn market rally on late planting, and if so, when? So if you guys are interested in this sort of stuff, check out that premium deal. It's $50 a month. Cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. President Biden unveiled plans to allow the summer sale of E-15 yesterday. Biden was in Iowa. He will apparently use executive order to allow the sale of the higher ethanol blend from June 1st through September 15th. The sale of that E-15 blend is typically not allowed during the summer due to smog concerns as it relates to warmer weather. It's not going to solve all of our problems, Biden said, but some people believe this could result in at least a small decline in gasoline prices. Some research, of course, has shown that the E-15 blend does not increase smog any more than the E-10 blend, which is already sold year-round. But in any case, this could result in some better demand for corn. You've got to remember that U.S. ethanol stocks are already very, very high, so we've certainly got the supply there. Some estimates indicate that you could see some additional corn demand. I've seen numbers from 10 to 30 million bushels thrown around in regard to that. You got to remember Trump tried to do the same thing, and his decision was ultimately shot down in court. We also know that there will be some challenges from the oil lobby. So this is perhaps not a done deal, but certainly a supportive factor for the corn market, I guess you could say, and maybe a positive factor for gasoline prices, meaning negative in regard to gasoline prices. Warmer temperatures return to the plains and U.S. Corn Belt later this month. So this morning, and here's my map over the next 7 days on average. Over the next 7 days on average, you're going to see temperatures 20 to 30 degrees below normal in North Dakota, Montana, a little bit of South Dakota, western Minnesota. A lot of the Corn Belt's going to be anywhere from 3 to 10 degrees below normal over the next 7 days. Now, around April 23rd, which is next weekend, you're going to see some above normal temperatures return to the northern plains and then to the Corn Belt a couple days later. So you got a cold snap here that's going to last more than a week, and by next weekend, around the 23rd, you should see this shift a little bit. Now, in the meantime, you've got snow over North Dakota, Montana this morning, moving its way into western Minnesota. You've got some scattered rains over Iowa, Missouri, southern Illinois into the south. So you do have some kind of scattered stuff on the radar here this morning. Next 7 days, wet for the central and eastern Corn Belt, very wet for the south, dry for the southern plains. A little bit of relief perhaps for some of these key HRW wheat areas in the southern plains around the same time that those warmer temperatures roll into the northern plains around the 23rd. And those forecasts, of course, could be subject to change that far out. Russia's invasion of Ukraine is ongoing and appears to be going in the wrong direction, if anything. The Washington Post reporting this morning that the Biden administration and the Pentagon are poised to dramatically expand the scope of weapons that they are providing to Ukraine. There apparently is an aid package in the works or being discussed worth $750 million that could be approved. Reports regarding agricultural activity in Ukraine are scattered. A lot of people believe that Ukrainian farmers will be lucky to plant half of their spring acreage. Winter wheat harvest, of course, is another issue and question mark. Putin said yesterday that peace talks with Ukraine have hit a dead end. He said that his troops would win and that the West has failed. So this situation does not appear to be ending anytime soon, and I believe it to be a supportive factor for the grain markets pretty much across the board. Chinese soybean imports declined in March. Chinese customs data revealed that total March imports were down about 18% versus the same month last year. They had some shipping delays in Brazil. They also have poor domestic crush margins, which have curbed demand. Hog producers in China are losing money as a result of higher feed costs. So you're going to see some more cargoes arrive here the next few months. The surge in COVID cases also a concern in regard to China and demand. I don't think it's going to be a huge deal in regard to soybeans in particular, but you never know. Total U.S. export shipments for the current marketing year are down about 18% versus the same period last year. But you got to remember last year was a banner year for corn and soybean shipments to China and to all destinations in general. U.S. consumer inflation is the highest since December of 1981. The Bureau of Labor Statistics released monthly CPI data, or Consumer Price Index data, yesterday. CPI rose at a record rate of 8.5% annualized in March. Again, highest since December of 81. A 48% year-over-year increase in gasoline prices is the biggest factor here. Used cars up 35%, gasoline or gas utilities up 22%. Food at home up 10%, shelter up 5%. I think these numbers are way too low, especially that food at home and the shelter number. Rents and housing prices are up far more than that. Fed fund futures are now discounting a more aggressive Fed policy. Money markets perhaps pricing in a half-point rate hike in May and another half-point rate hike in June. Yield on the 10-year U.S. Treasury hit a peak of 2.83% this week, or just today. That's the highest since December of 2018. So the inflation situation or problem continues to worsen here. Cattle market had a good day yesterday. Live cattle were higher to sharply higher. Feeder cattle were higher. There was some cash trade anywhere from 139 to 142. Not anything huge in terms of volume. In the outside markets, the U.S. dollar is higher again this morning, back above par. The S&P is up 24. The Dow's up 160. Bonds off a little bit. Gold's up $4. Crude oil up $1.34. 101.49 in the June WTI contract. Guys, remember, markets are closed Friday. I will be here tomorrow, of course. We'll talk to you then.